evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we are now at April 7th, 2021, 6:45 p.m. Central Time. Well, another day, another grouping to the upside. We have been paused, and that's the only word I want to use, paused, in the rally in the stock indices, and that was it. Now is the market trying to embark on higher high moves? Well, we'll talk about it in a minute. I'm watching with curiosity what the dollar's going to do. The dollar was on a tear to the upside. It corrected, got back to the 18-day average of closes, and suddenly it's run out of downsteam. That's an important event. And the same thing's happening via the upside that we had in bonds and notes. They rallied very nicely, but was it nothing more than a correction off a market that had gotten a heck of a decline very quickly, saw profit taking, and maybe it's now pausing, getting ready for the next leg. When I look at the market, you're up nearly 1.78% for the week. You're up 71 points in the S&P. This is just on a tear. It's new all-time high. So if you want to be bearish, you go do it. I'd rather buy the high, the absolute high, and be wrong than be a bottom picker in a market, or worse, in a market that's running like this, a top picker. This is called the graveyard. Do you know why I call that the graveyard? Everybody that's short from anywhere here in holding, and there's people doing it. Remember, in futures, for every long there's a short. They're losing money to the person. Okay. When you take a look at what the market's doing, the pattern is higher lows, higher highs, bullish. The market's over the 18-day average. The bias is up. So where's the resistance? The Bollinger Band. You got over it earlier this week. You can see here, here, and here. You had 3 days in a row over it. I told you as that occurred, and this was yesterday, I said the odds of it being up today were a grand total of 2%, okay, because you've already been up 3 days in a row. I count against the 5% of the time that each day of that 5% that where the market is over those numbers, what do I view it as? I count each one as taking away one of those percentage points. So I gave the market today a 98% chance of coming down. It's not a sign of weakness. It's just that I think it's going to get back in there, and it did. For those of you that buy my recommendations, I was putting out buy recommendations because I was counting on that today for the market to make a new high, which is occurring. When you look at the momentum, it's embedded. Embedded means you've converted the numbers in a slow stochastic in a way that they've gotten from overbought and just locked into a bull trend. That's what I love about slow stochastics. Unlike so many other oscillators that just get overbought, oversold, they get into a buy mode and they don't leave it. This one tells you what's going on, and it gives you warnings when it's going to leave that. It's just a neat indicator. For those of you that have already purchased my enhanced Bollinger Band course, this is one of the trades that we talk about. So is this one in the Dow that is coming up. In the NASDAQ, it's not there yet. You are running the upper Bollinger Band. That's very strong signal, but you're not embedded. You're simply overbought. Now, embedded means that the two numbers that make up the slow stochastic have settled over 80 at least 3 days in a row. So did you do it yesterday? Absolutely not. That was Tuesday. Did you do it Wednesday? Yeah, day one. I don't know what day two is going to hold. This is Thursday. You're too soon. The market's been open 2 hours. Why would I worry about what it's going to do? But trend is up. Market's made a higher high, and you're knocking on the door of all-time highs. In the Dow, fully embedded reading. I don't care what the swing line does. This is the interesting thing, and I teach it in that course. The slow stochastic takes over the trade, and it's then a game of the enhanced, and what do you do with that Bollinger Band versus this, and I tie them together in that course. And there's other things. If you go to our website at www.iraepstein.com, you can sign up for a host of free things, including my research, our charting software. There's so many things you might want to take a look. That's it. I'm not going to talk about that anymore. In the Russell, all you did is get up to the 18-day average. So when a market is underneath the 18-day average and gets to a Bollinger Band, a natural resistance point is the closest main moving average. Now you got the 200-day here, you got the 18 here. So it would be the 18 if it can get there, and you tell me what the market's doing. It's fighting its battle right against it now. What is the trend? Up. What is the bias? Down. You're not over that 18-day average, and momentum's up. So you need closes over that 18-day average to be good, but you got another problem. Let's assume you wanted to buy this market at 2239.40, okay? You'd have to have a stop under this low. If you think computer systems just are buying and selling and not looking at risk factors in them, well, that's your opinion to think it, right? I think they do look at that. And as I have filters, and I set up on each trade, and my people that get my full research, they see the parameters I use on dollar risk because I've done research on it, and that research showed me over the years. Does it change? It could. Have I changed it in years? No, because it seems to do what I want. I mean, there is a number. Just think about the logic of this. Where in a perfect schoolroom, okay, buy, sell, okay, it worked, you see that. But the risk associated could have broke your account. What do you do in the real world is you're putting out the people that are paying you for your research, and they don't want to take that risk. You better develop risk tolerances, and that's what I'm getting at. So trading ideas. I don't believe in trading programs per se, but that's really what algorithm trading is, and they seem to do okay. You have to be flexible and understand them and understand what they're built with. VIX cash, I still think the pros are basically they've written some puts down here. Now, they're not out any money yet at this point. We'll see if they can get the bounce back to the 18-day average. But if you go back, and you got to go back, I think, to October of last year, the last time you hit a lower Bollinger Band. And generally, when you hit them, they go back to that closest moving average. We'll see if that happens. In the 30-year bond, okay, we made a run to this number, the upper Bollinger Band. But there's another event that's happening. And the event's in front of you, and you've got to learn to look at it. We've come down dramatically. You know that you've heard the curve yield's gone up in the back end, and it has. What we've done is we're now sideways action. Do you know why? It's consolidating that. In other words, let it consolidate those losses. It will then embark on whatever it thinks the next trend is going to be. You're in that consolidation phase right now. That's why these bands are suddenly going sideways on you. Very difficult to trade in those bands. They're not going to be your friend. They're going to, sometimes you don't quite get to them. Either way, you're not quite there in the 10-year note, but I'm very aware it's starting to form it. So I pay attention. But the pattern here is a lower low, higher high. There is no trend. Again, you had that monster decline. As you know, you went from 0.6 basically to 1.77, and you've suddenly pulled back into the low 1.6s on these rates. And now the question is that enough? In other words, was the pullback enough, or is it going to want to spin in there more? I think it's going to spin a bit. In the dollar index, what we did, and this is not a line I drew, that's the 200-day average. It's intersecting with the 18-day, so I would look for that to be a support zone, and as you can see, the market is trying to do that. More important is what I'm trying to explain. You had an embedded reading, you lose it with the red line getting under. That's often a sign the market's going to try to fall back to the first main moving average, and it certainly did that. So it's hit it. What's the trend? Down. What's the bias? Up, because you closed over the 18-day average. What's the risk if you decide to get short? Back over right here, 93.13. So from where you're at, it's not a terrible risk. It's about $600 a contract, but you're not under the 18-day average. I don't know that the pros are doing much there, but if they're pressing it, I think they're pressing the short side with momentum down, bias going back and forth in the swing line down. Eurocurrency, it's the flip-flop of it. So we finally had a correction in a monster bear move that went from 122.80 roughly down to the 117 level, and we're getting our first real bounce in the market, okay? We had a pause back here. It failed miserably. We'll see. You know this is COVID related. If you're looking at European economic data, it's good. It's not bad. Even with the pandemic, they're beating numbers. What happens if they ever release those relief funds? It's a joke how they run there. You know, it's not the United States. There's no central government. Everybody's got a say in everything. And they released this money months ago to be sent to the member nations. Then a member challenged it. It's never come out. And of course, they're having nothing but problems with AstraZeneca. They have found again that it might cause a brain clot in a very rare disease that could, I guess it's 1 in millions that can get it, but they're getting it, some people. So the question is, will they continue using it? I think they will. I think that you don't have a choice, actually. It's sad, but it's the way it is. I wish they had the Moderna and the Pfizer and the J&J, but they don't. Higher lows, higher highs, momentum pointing down, bias down. This is a market that, again, money management was the key here. You fell back, the support's here, higher lows, higher highs. But if you're a buyer, you got to have a stop under this low. You're probably pushing $750, $800. That's an awful lot of risk, and I think it kept the computer boys away from it. We'll see what the market does. Big support, 136.72 to that whole area, 136.66. But do I think you should do anything there? I think you'd see short covering if it fell there, but that's about it. Bitcoin, you rolled over, lower highs, lower lows, overbought. Downtrend, you'd have to get back over the highs here, and you might be headed back into the 53,000 level. In the Brent versus WTI, you can see that we're in a corrective mode. You might get to the differential of 327 where I'd look for support to show up. That's the differential of the two. And right now you've got a mixed bag here. You've got higher lows, lower highs. Do you see that? There's no trend. Momentum is flat and the bias is down. You have a bearish pattern in WTI with lower highs, lower lows. So I think the trade is selling this market. Stops would probably be over the 60.89 level. If they can get it down, 56.77 would be a target. In the June rebob gas, you're in a corrective mode to the downside, but there's a big but here. Remember what it has done. It's really going sideways. And you have to understand what it's done after a big move like that. I view this as a consolidation move to the upside before the spring driving comes. It's not screaming at me anything yet, but I'm counting on the seasonals coming into play. So you put it together, that's the type of game plan that you have. So if you're interested in our products, here's something about them. I'm Ira Epstein. Visit our website, and I'll talk to you later. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.